Hey, what's going on, crypto people? Holy moly, happy Wednesday. Generational Wealth Wednesday to each and every one of you. Listen, FOMC meeting update with Jerome Powell. It's not live, but we're going to cover that. We're going to go through that because I know some of you guys didn't get a chance to catch that. We're going to share that. But I think more importantly, what I would like to share with you guys, I think is more important is Santiago Velez brought up an excellent point in decentralization versus counterparty risk. This is what the BTC maxis don't want to talk about. They don't want to talk about that, right? They don't want to talk about that because there is a big difference. There is a big difference between owning assets and holding assets in a cryptographically set vault, as I like to call it. They can call it an escrow, right? There's a big difference between the two. A big difference. A big difference. Santiago asked a great questions. We're going to cover that. None of the BTC maxis respond. I mean, like literally, the Bitcoin Pierre and the Rajat CFO, Sony CFA guy, none of them respond to that. Michael Saylor doesn't respond. Grant Cardone doesn't respond to that, which means to me, they understand the difference and they don't want to comment on it. And they know that that is a significant difference. I've been looking at a couple of Web 2 projects claiming to be on a blockchain, securing data, and decentralized, right? It comes to find out that this Web 2 company is just using an API to a blockchain. Does that mean it's on a blockchain? Does that mean it's secure? And does that mean it's decentralized? Nope, it doesn't. It's what they're doing, this Web 2 company. Remember the .com era? You throw a little .com to it. Remember now what's going on right now with AI? Everything is a .ai. It's a big difference. This is what this Web 2 company is doing, in my view, leveraging blockchain and what's going on in the market, the new thing in the market, blockchain, decentralization, utilizing those words and terms to move just a regular Web 2 product. That's what it's doing. That's what it's doing, in my humble opinion. But anyway, hope you guys are doing well. We're going to go with the market. We'll go with the numbers because the market is doing what the market does. I've looked at Minima Global now for about a month and a half now. Very interested to see Crypto Eddie's interview with the guy from Minima Global. It's interesting. It's very, very interesting. In any case, we'll go over that as well. And hopefully I will remember to share a video from the CEO of the HBAR Foundation, because he's speaking to, I think, the same place. It feels like they are, Hedera had HBAR Foundation, are at the same place that Ripple was. Kind of feels like it's the same. They're going through the same things. They're kind of going through the same things. So in any case, we'll see. We'll cover that as well. Michael Marchese, what's going on, my friend? Hope you're doing well. Leo Messi is in the building. How are you, bro? It's good out there in them streets. I want to cover this FOMC meeting right after we go over the numbers in the market. And because I want to prepare for, I think there's something going on at 4:30 Central Time. That and the dude from Omni. I want to get on that because, Omni, this dude, Arthur somebody, is making a lot of claims with Omni and XRP. So I want to get on that and see what's good. Guys, do me a favor, hit that like button on the way in. That'd be super, super cool. We always like to have just as many likes as we got viewers in the stream. I'm going to go over the numbers real quick, and then we're going to go over this FOMC meeting. All right, let's get into it. I just refreshed CoinGecko. And according to CoinGecko, the total cryptocurrency market cap is down 1%, is at 3.63 trillion, and the Bitcoin dominance is roughly 57%. Bitcoin is trading at $104,366 again. And on a 30-day, Bitcoin is up 10%. Word on the street, Michael Marchese, is that BlackRock just bought another $1 billion worth of Bitcoin. Is that right? We got to get some confirmation on that news. Ethereum is trading at $3,141 again. It's down 8% on the 30-day. Ethereum is having its struggles. XRP is trading at $3.10. And on the 30-day, XRP is up 46% on the 30-day. Not bad if you can get it. It's not bad if you can get it. Solana's trading at $235 again on the 30-day. Solana's up 18%. Dogecoin is trading at 33 cents again. It's down. It's up 2%, almost 3% on a 30-day. And the beloved SOE is trading at $3.82. Nice. On the 30-day, it's down 13%. It's down 13 on the 30-day. It's very, very interesting. I don't know. I'm just looking at this Ardera hash graph. I want to get it. I'm stuck between this and Chainlink, and I went ahead and added to our undo position. But yeah, I'm stuck between Hedera and Chainlink. Yeah, I'm just kind of stuck there. Just kind of stuck. And I did not make my low $500 to $1,000 purchase of XRP yesterday, just to full transparency. I did not do it. Did not do it, Jungle. Jungle, I didn't pull the trigger on it. So there it is, fam. That's the market, and the market is doing what the market does. Let's go to this little FOMC meeting. I know it's not, whatever, but it's not live. But let me see if I can just do this. We don't want to go through all this waiting around. We want him to be on, right? Let's go to where he's on. I thought it was fairly, I must have just, huh. Let's go to where he comes out. There he is. All right. For those of you who might not have seen it, I wanted to kind of share that with you guys. Say, kind of share what do you think is going to happen because of or not with it, that type of deal. Hope you guys are doing well, doing swell. We got that. We got that up. Yeah, we got it up. Legendary's in the building. What's going on, bro? Life is great, man. Michael Marchese says, if there is going to be a Bitcoin strategic reserve, why don't the U.S. government just mine it with all the computers they have laying around and not worry about buying it? Facts, they could mine it, right? It's a great point, man. It's a great point. All right, here it is.
My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Yep.
I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate. Over the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
No, I don't want to hear any of that stuff. That's a bunch of crap. It's just a bunch of crap. Who mandated this dude to do these things? Who did it? Like, who did that? Stable prices and maximum employment or steady employment. Who did that? I didn't do it. Who did that? Who gave them this mandate? To Congress? Congress gave it to them? Why? How did they hoodwink that one? I don't understand it. What's going on, Joe Buddy? His last question was about crypto. His last question was about crypto. Market rose, then came back down. Oh, really? So someone asked him about crypto, Joe Buddy? Because if he did, I'll go in and check that out. The board of directors gave him the mandate. Like, come on, already. Like, can we get rid of this Federal Reserve already? It's been the demise. It's been the absolute demise of the people. All that's the central banking system is just a disaster. It's just a disaster. So you said that was the last question, Joe? So I'll probably go back and check that one out to see what's good. Guys, do me a favor, hit that like button. I appreciate you guys checking in. What's going on, Pookie Pookie? How are you? Life is good. I think it's a more important thing is to really go over Santiago Velez of XD5 Protocol Employee Network. And I think he's over at Real Vision as well, right? Go over the difference between decentralization and counterparty risk that the BTC maxis, well, they don't want to have that conversation. Don't want to have that conversation. It's interesting stuff. You know what I mean? It's very, very interesting. Maybe we should go with that. So anyway, in the end, they're just going to keep things the way they are. No cuts. No cuts. Okay, cool. Awesome. A little Fed funds rate difference, a change, 0.25%. It's nonsense. They don't know what they're doing. They come up with this arbitrary number of 2% inflation. They don't know what they're doing. And they never have. They never have. And all the central bankers get together, they talk on the phone, they Zoom, and they figure out how we're going to try to figure out to just keep this Ponzi scheme going with just the fiat dollar system. It's Bank of Japan, Bank of England, the freaking Fed. It's just all a big fiat scam. They know it. They can't do anything about it. But hopefully we can get rid of the Federal Reserve and the IRS. That would be sweet. That would be absolutely sweet. We got to get rid of this central banking thing for sure. Looks like President Trump got some issues kind of going on. They're trying to do the lawfare thing against him again, or continuing to do it. So hopefully Congress is going to pass something that will allow these executive orders to happen, because what the Democrats are doing, unfortunately, is they're using the judicial system to block stuff. That's what they're doing. So it's crazy in the streets and just playing around with the American people's livelihoods. And you've got a sitting president with executive orders, and the other side of the aisle is trying to use lawfare so that these things won't happen. It's just kind of crazy. It is really crazy, crazy. So let me see if I can see what he says. What did he say about this crypto thing? Was he positive? Negative? Let's see. Yeah, okay, good. Let's see.
Always broad. You can consult models, empirical models, theoretical models. Been solidly there now for 6-7 months, and job creation is pretty close to a level that won't be on the table. Can you talk a little about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's proposed? The framework had really nothing to do with the decision we looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are, be knowledgeable about the financial banks to terminate customers who are, the threshold has been a little higher for banks engaging in crypto activity.
For the last question.
Hello, Chairman Powell, Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place in a household's portfolio?
So our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and we think it's banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks, right, that we regulate and supervise, do that. The threshold has been a little higher for banks engaging in crypto activities. And that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity, inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision.
That's a big turn. That's a big turn. That's definitely not what Operation Choke Point 2.0 was. I mean, or should I say Operation Choke Point 2.0 would say differently, right? Guys, do me a favor, hit that like button. If you didn't do so on the way in, no worries. Just hit the just go collapse the chat real quick, go smash the like, and then come back and hang out with the CryptoCeej and fam. That's interesting. Interesting. Kind of bullish, but that certainly is a turn from Operation Choke Point 2.0. We're good with crypto, as long as the banks monitor the risk. Yeah. That's not what the data or evidence shows. Because Operation Choke Point 2.0 still got the OCC and FDIC engaging in this type of stuff, even though they have been exposed, and it's going to come more and more to light about nefarious activities from those regulators. That's right, Michael. That's right. Michael says it's not what they say, but what they do. That's right. That's right. What's going on, Cali Cat? How are you, my friend? Appreciate you checking in. Interesting stuff coming from that dude, Jerome Powell. I don't believe a word, anything he's saying. Don't trust him as far as I can throw him. Don't believe that the true intent is what it is. The true intent is to keep the world indebted to the fiat system, beholding to the dollar fiat system. That's the goal. That's what they want, so that they can make the money off the backs of the people. That's the goal. And it's never changed. It has never changed. So I want to cover this post here and then I'm going to share one of my guys with you. That's Flair. Where is it? Santiago Velez here. Says one of the most disingenuous, this is Santiago Velez. I think he's at Real Vision, and he's the founder of XDeFi Protocol. Isn't he over at Real Vision? Doesn't he do something with Real Vision? I think he does. Anyway, I think he's still there. I hope I got the right person. I think that's him. But anyway, definitely XDeFi Protocol and Flare Networks for sure. One of the most disingenuous arguments made in crypto against any project is the idea that decentralization is equivalent to counterparty risk. There is an incorrect conflation between a network's ability to process transactions while solving the double spend problem as a public permissionless network, in parentheses, where your private keys determine ownership, versus the counterparty risk that large holders represent in purchasing power terms. Think Michael Saylor. Think BlackRock. These are not the same thing, and conflating them betrays a deep ignorance in the technical details by the people making the argument. Educate yourself instead of making a virtue of ignorance. And this is what I'll say. In terms of counterparty risk and ownership, this is what I'll say. Brad owns a lot in value of XRP, and so does Chris Larson and probably David Schwartz. I don't think anyone knows David Schwartz's stuff, right? But the escrow is like the BTC Maxis want to claim is that Ripple owns that, and they don't own it. They are stewards of it. It's cryptographically locked in an escrow, timed. Michael Saylor's Bitcoin is not locked in a cryptographic escrow, which means at any time he can and is able to, when he wants to, or if he needs to, can dump that Bitcoin. We don't know if he gets himself in a situation where he has to, and he's not concerned about what's going to go on in the market. That is what they call a counterparty risk. Not that he wants to wake up in the morning and screw the market, but what if he has to? What if he has to do it? He's able to do it. He has to do it, and he's able to do it. The XRP, in my opinion, that is in the escrow, in this time lock, cryptographically locked, where Brad or whatever, or David, they can't change it. It's there. They can't get more if they want more. They can't get it sooner if they want it sooner. And they voluntarily did that, by the way, after there was some concerns of the counterparty risk. By the way, back in the day, there was a concern about the counterparty risk, and they decided to put that thing in an escrow and do the thing. Right? Which to me takes away a lot of the counterparty risk there involved. And I think it's important to understand it, because they want to say the network is not decentralized. And hopefully David Schwartz covered that in his talk the other day in the spaces. I hope, well, he did cover it. I hope that people caught on to it and understood what he was saying. So anyway, see, person's power. These are not the same thing, and conflating them betrays a deep ignorance in the technical details by the people making the argument. Educate yourself instead of making a virtue of ignorance. For example, let's pretend that Michael Saylor had 99% of all Bitcoin in his wallet. This would not impact any other wallet on the Bitcoin network with regards to cryptographic security or transaction processing or slant node recognition. It wouldn't affect them at all. Not one micro iota. Name, nada, zip, nil, and zero. Now, if we want to talk about counterparty risk, we are implicitly talking about purchasing power in fiat terms. That is to say that the counterparty having a large amount can sell, so this is what I just said, can sell into the market, can collapse the price by selling a large amount in a short period of time. So when a Bitcoin maximum screams about decentralization, in parentheses, of holdings, because that's what they want us to talk about, right? What they are really saying is that the counterparty can make price go down in an illiquid market, which is what they are really obsessed with, namely fiat. There's a deep irony there that should be studied. The takeaways is that when evaluating a digital asset, you should study both the quality of the network to keep your assets secure, which is actual decentralization, and the distribution of assets on that network to preserve your purchasing power, in parentheses, the counterparty risk. Santiago goes on to say, I can think of one large holder in the top 10 by market cap that has cryptographically locked their holdings to preclude this selling event that is being postulated. Unfortunately, the largest Bitcoin holders do not have such cryptographic escrow mechanics in place. Here's looking at you, MicroStrategy. I wonder why, asks Santiago. He goes on to say, now evaluate your risk accordingly. It's a great point. Mr. EME says, man, you went too deep for these BTC experts. He says, Santiago says, I'm just getting started. The next step is to hold the largest holders on each network accountable. Why aren't they locking up their holdings in a cryptographic escrow to mitigate this counterparty risk on behalf of their community? It's a simple question. I think it's a very, very important question, and it is a point to note because we all know that Brad sells the XRP that he has. We all know that Chris Larson sells the XRP that he has. They both sell them. Now we can be, we probably all are a little jealous that they were the ones chosen to get all that XRP. We can be a little jealous about that. For sure. For sure. But the fact of the matter is that XRP and escrow out of the top 10 is the only one that is cryptographically locked in an escrow. That is the fact. That is the facts. Let me do a live chat here. I appreciate you guys checking in, man. What's going on, Jay Corn? How are you, brother? So Jerome Powell, essentially nothing. He's not going to make any cuts. That's awesome. Federal Reserve to me is just, I don't even know what to say. I don't even know what to say about the central banking. I'm just not a friend of it. It is without question the demise and probably the biggest hoodwink and bamboozle pulled on the people. I'm going to say American people by old money under the guise of we can get you this fiat so you can fight this war. In return, you got to give us this little something, something that is going to absolutely handcuff your people that you're supposed to be serving. That's what the Federal Reserve did. And old money were the people at that meeting that set that up. And then they set up the central banking system. Oh, nice. Jay Cohen says, just off work, on my way to a date. Nice for you. Good for you, bro. Good for you. So the biggest hoodwink and bamboozle ever, postulated on the American people was the creation of the central banking or the Federal Reserve. Tragic. Absolutely tragic what happened there with that. So what do you guys think about that? Decentralization versus counterparty risk. I think it's important. And again, I hope you guys caught the spaces with David Schwartz when he was talking about, I think it's one of the first 2 or 3 questions in regards to decentralization. What exactly is a validator slanted node? Did you guys catch that? Let's see if I have that one. Ripple X probably posted that one. So this is the thing that's happening later today at 4:30 Central Time, about an hour and 9 minutes from now. This guy here, Austin King of Omni, has been doing a lot of write-ups talking about what's going to happen with the XRP, the asset XRP. So he's been doing some good stuff. So, but this is going to happen at 4:30 Central Time. So plan accordingly. I plan on getting on this. But the David Schwartz thing, was okay, I don't have it. So let's go to Ripple X. And I'm pretty sure they had the recording. It seemed a little yeah, here's just one here. XRP Community Day APAC session. Unfortunately, Crypto Eddie was not able to, she had some technical difficulties, so she wasn't able to host it and kind of cover. So Crypto Queen stepped in here. Let's take a listen, and hopefully I can go to the part that I want to go to.
A fund. So we have fund, FCA regulated, and they have a tokenized money market fund from Aberdeen that they've brought to XRPL.
Okay, this is the part with Monica Long. I thought so. This says Well, this is 2 hours, so this is probably Monica Long's part first, and then David's. No, this says 2 hours. Anyway, you guys want to hear what she has to say? Let's.
For stablecoins, the market.
What are Ripple's top building use cases in gaming, tokenization, and more? My friend and well-known XRP community member, CryptoCeej, will host a much-anticipated chat with David Schwartz, Ripple's CTO, who will close the session with a discussion on the XRPL's 2025 roadmap. So please stay tuned for that. However, now it is my pleasure and honor to introduce our first speaker and welcome her to the virtual stage, Monica Long, President of Ripple.
Hi, thank you so much for having me, Moonchaser, and happy Lunar New Year, everyone. This is Monica Long. I'm President of Ripple. I'm very, very excited to be here and really appreciate everyone tuning in.
Hi, Monica. Today we're going to talk about Ripple's main priorities for 2025, as well as digital asset innovation in the APAC region. Before we get into it, can you please share a bit about yourself?
Okay, so I don't want to cover that. I want to hear David. Let's see what David is.
And stoked to have you up on the stage for the XRP Community Day for the Apex session.
This is David.
How you doing there, David?
Great. Thanks for stepping in. I was afraid I was going to do this all by myself.
No, we'd never let you do that. David, there's an ongoing debate about XRPL's decentralization. Can you explain how the XRP ledger's consensus mechanism ensures decentralization?
Sure. This comes up every once in a while, and I think a lot of it is just because the XRP ledger is different from proof of work or proof of stake systems, and it's very difficult to compare them directly without taking into account their differences. One thing I want to say ahead of time is that the XRP ledger, like every decentralized layer one, has nodes that run software that verifies the validity of every transaction. No node has to ask anybody else if a transaction is valid or what the state of the ledger is. That's all public information. There are no administrative transactions on the XRP ledger, just like there aren't on other major layer ones. The consensus algorithm for the XRP ledger's primary purpose is to solve the double spend problem. It isn't really it's not the rules enforcement mechanism really, because no node would, like let's say you tried to execute an invalid transaction to, I don't know, create 1 billion XRP out of nowhere or transfer someone else's XRP to you. No node would accept that transaction, whether it's a validator, regardless of who runs it, all of the rules are enforced by the software. But it is the consensus mechanism that's the most different. And I think that's important. First of all, validators are not block producers. They don't unilaterally produce blocks. There's no leaders. There are no elected nodes. The validators work together to figure out which transaction of conflicting transactions was seen first. That's basically it. Every 5 seconds, all the participating nodes collaborate to reach agreement on the state of the ledger. And essentially, for a transaction, they can do one of two things, assuming it's valid. They can agree to execute it in the current ledger, or they can defer it to the next ledger. And that's it. There's no way for a node to say to another node, hey, this transaction is valid, but let's just not execute it ever. There is no way to do that. Why would there be? A vote of no on a transaction in consensus means I didn't see it in time to include it in this round, but we'll include it in the next round automatically if it's valid. And the XRP ledger recovers transactions deterministically. Validators are not paid. There's no compensation for being a validator, but the cost to run a validator is not that high because you're not doing proof of work and you don't have to have some collateral. It's not proof of stake. You just have to do a good job of being a validator. Mm-hmm. Each node selects the set of validators that they sort of want to listen to or come to consensus with. And no single entity can unilaterally decide, whether a transaction gets a yes vote or a no vote. So there is no sort of dictator of the moment. Most proof of work or proof of stake systems, they elect somebody's chosen somehow to produce each block, and they get to be the dictator for that particular block. There are no block dictators on the XRP ledger because the network actually comes to a consensus around which transactions to include in it. Ripple operates a small number of validators, only one that we would like people to try to come to consensus with. The others, test purposes. They run by universities, other validators by universities, financial institutions, other independent operators. And again, control over the validators does not let you control the network. The rules for the network are enforced by the software. No one party can change the system's rules because the system's rules are enforced by the software that all the nodes run. And there's no license agreement that you have to agree to be on the XRP ledger. There's no contract. You can run whatever code you want. The only constraint, and this is true of all decentralized systems, is only people who agree on the system's rules can interoperate. If you wanted Bitcoin to have some different rules, you could have those different rules. You just couldn't interoperate with people who didn't want your rules. And that's it. You have to agree on the core system rules in order to agree on a ledger. The design is cooperative and not, it's not sort of conflict-based or competitive like proof of work and proof of stake are. Since there's no rewards to distribute, there's really no benefit to being a validator except that the network works. There have to be validators for the network to work. So if you want the network to work, somebody has to be a validator. It doesn't have to be you, but you want there to be enough for the network to be reliable. So it's a cooperative process that benefits the network as a whole.
Yeah, thank you, David.
So anyway, I wanted to kind of cover that and share that with you guys as well. Hugely important to kind of understand that David does a nice job of making that kind of simple for those people in the back to understand. Legendary, you're funny, bro. So yeah, so this is kind of what it is, David covers that. I think it's important. Listen, just on the side note, the programmability stuff that's coming is going to be a minute, fam. It's going to be a minute on that. It's going to be a while before we see the benefits of that, which is why I want to get on the call today at 4:30 Central Time, because I want to see, because what I'm hearing from David, if you listen to that, it was pretty quick, 30, 35 minutes. David kept saying institutional DeFi. But to me, what he was saying was you take some of these entities outside that are not on the chain. They got a product. Maybe it's mortgages. Maybe it's, I don't know, banking. I don't know. And then you put them on the ledger. And what he's saying is not just for institutions, it's for retail, because they have customers. They have customers. And now they are going to be able to, those customers are going to be able to gain the advantages of being on chain. But to me, that's not retail, because they are not buying crypto to participate. They're not getting a wallet. They're not getting a ledger. They're just going to leverage the advantages that the blockchain offers the institution, right? Well, what I'm saying, so for me, those are not, that's not retail. That is what we like to call no coiners, right? They don't have any crypto, right? They don't have any crypto. Just like this particular Web2 company is called R-Link, R-Link. And they're claiming to be a decentralized version of Zoom. And it's secure because it's on a blockchain. Well, no, it's not. It's not on a blockchain. It's not secure. They're just APIing and using a blockchain network to API the Zooming service. Not the same thing. Right? But in any case, so I call those people that David's talking about, I'm like, those are what we call no coiners. And so the no coiner uses an institution or a Web2 company, etc. That Web2 company institution decides to tap into the liquidity on the XRPL, for example, right? Make some transactions and stuff like that. Cool, awesome, it's great. hundreds of millions, hundreds of billions to trillions. That's all awesome. But those customers are not going to become now crypto people. Right? They're not going to become crypto people. If your bank hops on the block, if your grandma's bank hops on the blockchain, your grandma's not now all of a sudden in crypto and it's a crypto holder, right? So to me, retail is the people in crypto who are not institutions and who are not accredited investors. That's retail to me. What do you guys think? What do you please? I'm curious to see what you think. What do you consider? Because I don't consider someone who's not in crypto, whose HR service decides to hop on a blockchain for the benefits of the blockchain provides the HR company. And these people over here have no clue, have no idea, and they're just going on with life. I don't think you're retail until you get into crypto. You get yourself an account on Coinbase or Kraken to begin. You eventually get down and download in Rabby Wallet or MetaMask. That's retail who are not accredited investors or an institution. To me, that's retail. And I feel like David Schwartz is, I don't know, feels a little bit on the sly tip because he keeps saying retail, your retail wants to be able to do something safe, like earn 4% or 5% on some stuff. Do you understand what I'm saying? I don't know if you guys listened to the David Schwartz part, but to me, that's what that sounded like. So let me know. Oh, Joseph says true, Siege. Thank you, man. Appreciate that. Good to hear from you, brother. Appreciate you checking in, Joseph. That's, so I don't know. I listened to the David Schwartz part of that. I don't see the retail part. I think he's talking, because I remember on this other talk, he said, hopefully their customers, hopefully the institutional customers will get into crypto, right? So, but in the same vein, he says, a lot of people think when we say institutional DeFi that we're not talking about retail. So if you guys want to hear that part, let me know. But what do you think? What is your definition of retail? Do you think because if a Web2 company and or institution hops on a blockchain, so this Web2 company or institution has customers, and they hop on a blockchain because the blockchain makes the thing that they do better, more efficient, fast, I don't know, secure, whatever it does. Are their customers now in crypto? I say no. So if they're not in crypto, how is that retail? I don't think that's retail. We call those people no coiners. They don't have any crypto. They're not involved in the digital asset space. So to me, retail is people in crypto who are not accredited investors and are not institutions. That's the retail. This is what I think Solana and the Solana ecosystem understands. And they make products to onboard retail, to give retail access to better services and a better financial system. That's what I'm saying. What do you guys think? I mean, let me know. What do you think retail is? I mean, it's okay if you disagree. I mean, it's totally cool. You know how we do here. But I don't, I don't know. Rick Cisneros says, Siege, did you hear from yesterday's XRP event that a company called Eliza from Korea They are tokenizing Bitcoin miners on the XRPL to gain LP tokens. You get a range of yield between 3 and 38%. It's interesting. Tokenizing Bitcoin miners. Bitcoin miners. Are you talking like Marathon? I mean, and Riot? You talking about Marathon, like those companies? And they're going to do it on the XRPL. That would be super cool. That would be super cool. So anyway, that's kind of how I see it. I have not heard about that, Rick. I must have missed that because I listened to that part where all the projects were coming up and they were being called onto the stage in the spaces. So I missed that one. I must have missed that one. So I don't remember that. That would be interesting. Michael Angelos is here. What's going on, brother? Good to see you, CJ from San Diego. Appreciate you checking in. Everybody say hey to Michael. So that's kind of high. Eliza from Korea. Yeah, that's interesting. They're going to tokenize Bitcoin miners. That's interesting, bro. So anyway, that's kind of how I feel about the whole David Schwartz thing that he did yesterday. I just feels a little like it's kind of like sly. Because he's calling it DeFi, he's saying it's institutional DeFi that includes retail. Again, that doesn't stop Moy Finance and Orchestra Finance from doing stuff. But again, when is Ripple X going to incentivize these liquidity pools and have an event, an incentivized event with liquidity pools for XRP and RLUSD? That's what I want to know. That benefits retail, the people in crypto who are not accredited investors and not institutions. That incentivizes them to get into liquidity pools, right? And to participate in DeFi, right? So projects like Orchestra Finance and Moy Finance can, right? Anados Finance can thrive on the XRPL. William Leather, what's going on, bro? There's an XRP meet up in Durham, North Carolina. When is that? Who's holding that, William Leather? Who's holding that event? And when, my friend? What's going on, bro? I appreciate you checking in, William. So, I don't know. Yeah, I don't know. That's what I want to know. I'm going to ask this Omni person. So again, Ripple could be doing their thing. Doesn't stop Omni and Orchestra Finance, but places like Orchestra Finance and Moy Finance and Anados Finance, right? You get $1 billion every month. Let's incentivize these projects trying to do DeFi, trying to do true DeFi. Right? I mean, you look at Flare Networks. Oh, you're saying you want to do one. Okay. William Lettler's like, let's set a date to do one in Durham. Oh, I hear you, bro. Where's that at? Where's this incentive? He said he was going to incentivize liquidity pools. David Schwartz said it. And of course, they screened the questions, and then they only took a certain amount of questions, that kind of stuff. In other words, the people on the spaces didn't get to ask questions. They screened these questions and then they brought them. So, oh, okay. Yeah, I'm not down in that area anymore, bro. William Leather. I'm in Tejas. So that's kind of how I saw that. In any case, that's kind of what it is. it doesn't feel retail to me. William says I'm buying his drinks. I hear you, brother. Let me share it. It doesn't feel like this is retail to me, Yosef. It just, let's see if I can't find it.
Now, I know recent critics have labelled XRP as a scam and of an institutional DeFi roadmap featuring various advancements. So I don't know, did you want to talk about that any further, David?
Of course, I could talk about institutional DeFi all day. The first thing I think I should talk about is what I mean by institutional DeFi. So one thing I don't mean is DeFi that's like exclusively for institutions. I think you could see a world where DeFi is used by institutions to interoperate with other institutions and like ordinary people don't use it for anything, but that's not super exciting to me. What's super exciting to me is adoption of DeFi by billions of people. And for that to happen, there needs to be connections to the existing financial system and existing financial products. We cannot build an entirely new ecosystem from the ground up without leveraging the rest of the ecosystem. The rest of the ecosystem is where people get paid. It's where people pay their phone bills. It's where people pay their rent. Like that's people's money is going to come from there and it's going to need to go there. And so it's going to have to be part of institutions are going to have to be part of the bridge to bring retail people in. So we mean innovative, open aspects of DeFi with compliance, security, scalability requirements that institutions demand that provide services to retail. And I'll just give you two examples. So one is stablecoins.
Again, he's saying that provides services to retail.
Stablecoins are an institutional product. Ripple launched a stablecoin, but probably very few people, if anybody on this call, will ever mint or burn RLUSD from Ripple. You will not do business with Ripple to use the stablecoin. I'm sure there's people on this call who've used USDC, and probably none of them have ever done business with Circle directly. Only institutions can get, USDC to and from Circle, but probably people on this call have used USDC. It's a retail tool. It's enabling entire DeFi ecosystem. So that's institutional DeFi. It's retail ecosystems enabled by institutional products. And lest any of you think, oh yeah, well, stable coins are that, but there's nothing else. What is David talking about? Well, tokenized real world assets are going to be that next step of an institutional product. It's going to take institutions to tokenize things like mortgages and stocks and treasuries. Institutions are going to have to do that. They're going to have to be very plugged into the current financial system, but they're going to be providing these products. And while they may not be interesting to some of you guys, most people probably, if you've got money and if you're in the first world, you're probably more interested in like high risk and high return and things that are fun. But paying your rent is not fun, but like that's what people need to be able to, your money has to be where you can pay your bills with it. And it's those non-sexy, most people, 99.9% of people probably need moderate returns that are very safe. If they could have, part of collateralized loans, that would be awesome. If they could have access to, tokenized stock, that would be awesome. So we've been focusing on DeFi capabilities to the XRPL aimed at institutional needs so we can bring them on.
That's what it says, aimed at institutional needs so that we can bring them on. And I just think he's talking about the customers or potential customers of institutions and Web2 companies. And they get on the blockchain and tokenize something that they have. And I'm just, again, how is that getting that person into crypto? Maybe when you hop on the XRPL, you tokenize something. It's going to be a wallet associated with it, the ID associated with it, and all they got to do is just keep living their lives. And there's a wallet or something associated with, and instead of the services that they got, it's now a tokenized version of the service, and somehow there's crypto there. I don't see it, but maybe that's what he's talking about. 99.9% of the people just need, to get something like that from a tokenized loan collateral or tokenize something other. No. They're losing money at 12% a year. in the basement. So getting some 5% product, no. They need DeFi and crypto. Unless these institutions are going to come up with a token as well, then, that's a different thing. So we'll see. Dre is in the building. CJ, great to hear you today. Thank you, brother. I appreciate you checking in. That's what it sounds like. Yeah, that kind of is what I'm thinking as well. Yosef. Thank you. William Leather says, love your show. Thank you, brother. I appreciate that. Yosef says, sounds like they want institutions to come into DeFi, but be on the other side of the exchange. Correct. They may be the liquidity for retail. That's a point that could be true. But when retail, if we as holders in the digital asset space, holding XRP and other digital assets, if we're able to benefit from that, that's awesome. That's cool. Without, again, like for example, Ondu Finance, this is a prime example. Now, if they're going to be doing something like Ondu Finance, cool. Awesome. Right? If they're going to bring versions of Ondu Finance onto the XRPL, cool. Because Ondu, the product's not available to the US. You got to be an accredited investor to get that OUSG deal. But Ondu has a token. And you and I can get the token and participate. So just like Centrifuge has a token. And participate and benefit from what might happen and take a chance on what might happen to be able to participate, understanding the risk that's associated with that. Cool. So if they bring it on projects like Ondu Finance, awesome. Got a token associated with something going on, and retail that's in crypto can participate, awesome. This is why I like the lending protocol, because David Schwartz already said we'll be able to participate and help funding these loans. Yeah, institutions have too much money to come in the same way as retailers. Jackson Knox, what's going on? Jackson Knox says, absolutely nobody is twisting my arm to make me invest in XRP. That's awesome. Nobody twisted my arm either. I see it. I understand the mission of it enough to be here for the ride. I'm not here for some mystic revolution of decentralized blah, blah. Yeah, I hear you. Well, I'm here for the mystic revolution of decentralization, bro. Because that's the answer, in my opinion. DeFi is the answer to the hurdle rate that is 12% in this market. The basement of the currency, the debt situation, all of that, in my opinion, because holding an asset you're completely susceptible to the market. DeFi allows you to not be beholden to the swings of a bear market or a bull market. Not be beholden to it. Decentralized finance takes that away, where you don't have to be beholden to the market. I'm not beholden to the bear or the bull market because I'm in DeFi. In other words, I can change my net worth in a bear market and the bull market. Holding an asset and only holding an asset makes you susceptible to the bear market and the bull market. Now, if you're good with that, and if you're good with the 4-year cycle, and if you're good with the 95% retraces in the bear market, cool, awesome. Yeah, you got yourself a 10-year plan, awesome. Right? But for me, DeFi takes away all of that. Craw Billies is in the building. How are you, my friend? Stream that wealth knowledge, CJ. Thank you, man. I appreciate that. What's going on, Craw Billies? Yosef says exactly 100% CJ. Yeah. Become your own bank is the goal, without question. That's the goal, in my humble opinion. By the way, that's the title of a great book that I would highly recommend everyone read by R. Nelson Nash, Becoming Your Own Banker. Yeah, so that's kind of that's kind of the deal there. So, Goose says Flair FS. What's that? Flair FS says never have to sell my XRP. I hear you, my friend. I hear that. I hear ya. I hear ya. Create that cash flow. Oh, there was a nice interview. Did you guys see that? Goose, you see that interview on with Hugo and what's it called? The Factor podcast? Was it The Factor? The Factor? I think it was The Factor. Let me see if I can find that for you. That was a nice interview with Hugo. He goes on that CEO journey. God bless him. It takes a minute to get it. What do I want? Nope, that won't cut it. Yeah, I gotta do this. Did you see that interview, Goose? Let me get it for you. I'll put the link in for you guys. It was really good. Let's see. Let's go here. I said I was going to cover this Hedera thing. I feel like Hedera is kind of at the same kind of conundrum that Ripple, the company, was in about a year and a half to 2 years ago, when they figured out that maybe we need to do more things driven towards retail as opposed to enterprise. And this kind of sounds like that's what Hedera Hashgraph has just come to the revelation. Where is it? Yeah, Decipher, the Decipher podcast. Listen to this. Listen to this first part here. I'm gonna hop off here. It's Hugo song. All right, just listen to this. You ready? Let's take a listen.
I'd really like to see just like much better application to blockchain. It's crap. Most of the time it's crap. We don't want to compete with Chainlink. We don't want to provide oracles to other blockchains. There will be nowhere else where you'll be able to rely on Oracle and the TE network and pay for it all with one token. Everyone's focusing just on AI agents for this. And it's like, no, there's so many use cases. There's huge gains to be made.
Hey, we'll get right back to the podcast. But first, I want.
So let me get this link for you guys. That was a good interview. Coffee and crypto. Did I miss any news about what? Did you miss any news about what, my friend? Zober's here. What's going on, Zober? Also earning from staking for passive income. Are you staking with the FLR? Oh, wait a minute. What did I just have? A very interesting post with someone using Cyclo Finance as well. I'll cover that later tonight. She did a quick little, I don't know if it was a TikTok video or YouTube video using FLR, getting the Cyclo FLR and using crypto.com, putting that on the crypto.com and going shopping. It was an interesting little thing. I'll share that later tonight. There's a link, Goose. There's the link, my friend. Crow Bailey says, I'm fixing someone's toilet for free, just like Forrest Gump says. I hear you, my friend. How awesome is that? You're welcome. Oh, you're staking on Enosis. On Enosis, you're staking. Okay, gotcha. So there it is, fam. I'm going to wrap it up. I appreciate you guys checking in here for sure. Do me a favor. If you didn't get a chance to hit that like button on the way in, please do so on the way out. It's one of the greatest ways to support the channel. It helps to get the channel out to more people out in the world who don't know that there's new financial system. There's a new financial system literally being built right underneath their noses. No clue. Have no clue that it's being built. Rick Cisneros says, we need to get rid of the accredited investor rule in America. without question. Right now, DeFi is helping us investors creating a level playing field. We don't need Goldman Sachs running our money. Correct. 1000%. That's what it's about, being back in control of our money. I do not own any XDC, Leo Messi. Joseph says, okay, Ceej, excellent live stream. Thank you, Brian. I appreciate that. So do me a favor, hit that like button on the way out. That would be super, super awesome. And if you happen to be in that 55% or so people that are hanging out, listening to and watching the CryptoCeej, do me a favor. If you have been enjoying those hangouts, please consider subscribing to the channel. We're in a mad dash of 9,000 subs. Got 3 days by January 31st to make that happen. And you can do your part right now by just hitting that subscribe button. We definitely appreciate that. And don't forget to ring the notification bell so that you know whenever we go live or whenever we upload a video. I'm going to, in this one, like I do all my videos, and remind you guys of this. Old money doesn't want you to win. But that's okay, though, because you and I, we're already winning. And I would ask you to consider this, or perhaps ponder the idea or notion of living your life permissionless. I'll talk to you guys soon. See ya. Bye.